Welcome to the Investors Trading Academy event of the week. Each week, our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled during the next week. This week, we will focus on the Jackson Hole Monetary Policy Symposium. This meeting takes place each year in August. The Federal Reserve Bank of Kansas City's Economic Policy Symposium began in 1978 and moved permanently in 1982 to Jackson Hole, Wyoming, which is the 10th federal district. The event takes place at the Jackson Hole Lodge, a National Park Service facility that does not have any resort-like amenities such as a spa, exercise room, or salon. As such, the bank receives no special consideration from the lodge, which remains open to the public throughout the 2 days of the symposium. The Kansas City Fed is proud to host this event at one of America's national parks with attendees representing central banks from more than 40 countries. The Kansas City Fed recovers the cost associated with the symposium. All attendees pay a fee to attend, which in 2013 was $1,000 per person. Because of the importance of recovering costs, even members of the news media who attend the conference pay this fee, a practice that is distinctly different than most other conferences in the public and private sector where reporters are regularly admitted without charge. The bank takes pride in the symposium's 37-year history. The event is known as one of the longest-standing central bank conferences, bringing together economists, financial market participants, academics, U.S. government representatives, and news media to discuss key long-term policy issues of mutual concern. For example, in 1990, the symposium focused on emerging market economies, with central banks from Eastern Europe and the USSR taking place in discussion for the first time as they joined the international community. This year's speakers include Janet Yellen, the head of the Federal Reserve, and Mario Draghi from the ECB, along with Bank of England Governor Carney. This event always receives international attention. Former Fed Chairman Ben Bernanke caused a stir last year when he opted not to go. It was the first time since 1987 that a Fed chairman skipped the conference. When word got out in April of 2013 that Mr. Bernanke would not attend, it stirred speculation in the markets that he was preparing to exit from the Fed.